Hello and welcome. My name is Evgeny Rusakov and you're watching TVP World, interview from Vilnius. Today, we are talking about the global economy in 2025, the situation in the Baltic States and Poland, and the key challenges facing Russia's economy amid ongoing geopolitical tensions. My guest today is economist Marius Dubnikovas. Marius, thank you for joining us today, sir. Glad to see you in our studio.
Thank you, Evgeny, for invitation.
So, first of all, those recent events in Venezuela. So, what impact could those events have on global markets and oil prices in particular?
Well, we have a short-term and long-term impact. So the short-term impact is that at least in the morning, the oil price has decreased somewhere above 0.5%. Everyone is evaluating that the export of Venezuela is very small. It's below 1% of daily oil supply globally, so there is no much impact, but everyone is expecting that the oil will flow from the biggest reserves in the world that are beneath Venezuela, and there will be more oil in the future rather than today. But this is a short-term impact. The long-term impact will be the supply. And another thing is that United States of America, if it will gain control around Venezuela, or at least they will manage to invest in Venezuela safely, they will gain a huge power in the world, because Venezuela's reserves are above 300 billion of barrels of oil,
the
biggest pile of oil, and this amount is even bigger than in Saudi Arabia. So this means that there might be a shift of oil market control from OPEC to the US.
Okay.
And another thing is, when Venezuela would step up in, let's say, in the next 5-7 years into the oil market, it could pull out or Russia out of the market, because it can overperform it.
Now let's talk about 2025. So how would you rate 2025 from an economic point of view?
I would say that it was a risky year, because we had huge shifts in the news. We had some kind of recession or depression in the March to May, in the early start of the year. And then we had an expansion. The financial markets boomed, and everything went up. I'm very happy with the Baltics and the Poland as well, because despite 2025, we should look for a longer period, for example, for 15 years period. We see that the region that we are living in, Poland, Baltic states, are those who advanced at the biggest pace in the European Union, and it relates with all kind of stuff. So, for example, in Lithuania, we had a period of the last 15 years when the salaries and the buying power, evaluating the inflation, increased at the rapidest pace in the world. Sometimes when you read it, you cannot believe it, but it's true. So in Lithuania, the buying power of the people increased at the biggest amount in the world. And for example, these kind of countries like Switzerland, like Germany, like US, Australia, New Zealand, Scandinavia, over the past 5 years, their buying power of the people has decreased. It is unbelievable. It is decreased. So this means that these kind of countries, they can buy less than they could in 2019. So this year, I would say, another year of growth and another year of bigger perspective for the future.
Brilliant. Now let's talk about Russia's economy. So for 2 years, the war boosted Russia's economy, but looks like 2025 has become a crucial year for Russian economy. So what has happened and why?
First of all, this boost is artificial. It's not real. So when you're investing in the things that won't be used for the future, you are losing money in the long run. So this happened to Russia. The third thing is that you're burning your reserves, whatever you have. So the biggest part of the reserves are locked in Belgium. The other part that is inside the country are being burned and burned over 2025. So this means you do not have money, then you get more and more sanctions, and this means you are losing your income from the foreign countries more and more, and then you are losing people. So losing 1 million of men in the front isn't a very good idea when you are thinking about manufacturing and production. So this means you are losing the working power as well. And you said two years, but we can think about at least 4 years that the anniversary is coming.
Exactly.
On February. And over the 4 years, Germans, when we were attacking Russia, they managed to go to the Moscow and go back. Russia did nothing, almost nothing. So over those 4 years, so they stuck, and they are burning their money and burning their future, long-term future, quite heavily. And in 2025. Probably they started to feel it by themselves, not only in theoretical level, but also in practical.
By the way, sanctions, how effective they were in 2025 and throughout the whole period since 2022?
They were effective because what we have seen, let's start from the ruble rate to the major currencies, for example, to USDs. When they started the war in 2014, the ruble cost somewhere about 25, 27 rubles per one USD. Right now we are talking about 80, 100, and sometimes in some periods, and etc. So they lost the rate like 3 times. The next thing is the imports to the Russia. We saw these articles about like Porsche cars stopped working, etc., etc. So this is only a cherry on the cake, but still a very interesting stuff. The another thing is no technologies. Bans on oil and gas. They lost all the European market on the gas, which was heavily important for them. And right now, in the end of 2025, they've got sanctions on Rosneft and Lukoil. So this impact was very huge. And for example, Urals type oil that Russia exports, the price in December was somewhere about 33, 34 USDs per barrel, when Brent type of oil costed about 65, something like that, so half of the price. What does it mean? This means that in the past, Russia got revenue, half of the revenue got from oil and gas, and this sector is impacted. I doubt that Gazprom right now is a live company. I think that it might go under bankruptcy normal situation, because it does not get revenue, and the costs in that kind of sector are fixed. This means you have to pay. You have to pay for the workers, you have to pay the oil fields, gas fields, etc., and you do not get revenue. And when you are down with your revenue, like 50, 60%, none of the company can survive. So right now, at the same pressure are Lukoil and Rosneft, which these two companies are exporters of oil, like somewhere about 55% of oil, Russian oil, being exported by these two companies. So these two companies are again under the huge pressure. The tankers are being sanctioned.
That's right.
And sized, and etc. So Russia is going down and down, and Russia is burning its future. It's not about today. It's about the future. What will happen in the next 5, 10 years, 15 years, and so, etc. Because when you spend your all potential right here, right now for the war that does not have to be, you are spending your future, you are killing your young people, etc.
Briefly, how realistic is a transition from a war economy back to a peaceful one under the current political and economic conditions in Russia?
Right now, it's impossible, probably, because you have to stop the war first. If you do not stop the war, you cannot go off the rails of war economy, because then the war will be stopped.
But that's already hard to do at this point.
It's very hard to do, and then after all things, probably the one natural thing that might bring to that kind of result is money. They are leaking of money, and there's a shortage of money, and probably next year, this year, next year, they will feel it very hardly. So this might pull out them from the war economy. But first, the war should be finished. Without that, it's impossible.
Okay. Again, briefly, what's your prediction for 2026?
I think that 2026 might be quite good. We have still on our table a technological revolution with AI and all robotics and technological development. So we will see faster development in 2026. So this might bring out some results, good results. Looking at the biggest banks and biggest houses of analysts, what are the forecasts for 2026? So it's forecasted that the profits of the companies will increase and the price will increase. So if it will be true, it will be okay. Every bank that made a forecast made a very similar forecast, but they had stars, small stars. What if? So what if was if there won't be a bubble increase in AI sector, and it won't burst. So everyone sees that risk and potential as well. So this is major risk. Looking at the geopolitical side, probably we won't see much more escalations that we had as we had last year. So we had a situation with Iran, we had a situation in Gaza that are solved.
We still have war in Ukraine.
We still have war in Ukraine, but it is frozen in the front line. It is very bloody war, but it's still frozen. So I do not hope that it will change in one or another way. I hope that it will end in some way, but still there is no. It's just hope, not a forecast. So majorly in the region, we have a potential for quite a good year, especially in Baltics and Poland, because we are investing in defense sector. So this whatever you evaluate it, whatever you want, but still it is government spending, and a huge government spending. In Poland, the budget deficit is around 6%, and the government is spending a lot of money. And when the government is spending money, so this means additional supply of money into the market, and the growth is just programmed there. So for the 2026, 2027, we have a quite, I would say, bright year.
Optimistic.
In our region, in Europe as well, in US as well. Well, this forecast might not work if something will happen very bad, what we cannot know. So, but what we know,
a black swan. Let's call it a black swan.
Yes, a black swan effect. If it would happen, something wrong, terribly wrong, would happen. But from information that we can know right now, it seems like we have quite a good start for the year.
Brilliant, brilliant, Marius. Thank you for joining us today. And thank you, and I really hope to see you once again in our studio.
Thank you.
Thank you. And I would like to remind our viewers that our guest for today was an economist, Marius Dubnikovas. You're watching TVP World. Stay with us.